Good evening, everybody. Welcome to our Bodnar Financial webinar on long-term care insurance. My name is John Bodnar. I'm here again with fellow certified financial planner, Justin Esposito, and we are here at Mission Control at Bodnar Financial in Florham Park, New Jersey. This evening, together, we're going to help you think about a critically important part of your financial plan. Long-term care is often like the neglected stepsister in the risk management module known as financial planning, because we're so preoccupied oftentimes with estate planning, which answers the question of how do I plan for when I die? How do I pass things along to the kids and the grandkids? Long-term care is the other side of that coin. Today, we're going to help you answer the question, how do I plan for living too long, for staying alive and getting old? All right, that's what we're going to concentrate here on. But before we jump into the next slide, I want to run through just a couple of quick housekeeping. Number one, there will be a replay of this and it will be posted on our YouTube channel. Hee hee ha ha, giggle now. Yes, there's a Bodnar Financial YouTube channel. Number two, you will get a copy of these slides. You don't have to ask for them. Anybody who's on this webinar tonight, we have your email because you got the invite to this webinar, and Justin is going to take these slides and he's going to email them to you. And finally, we will be turning off our camera here in a moment so that you can focus and concentrate on the slides and not see me and handsome Justin behind me. But we will return at the end to say goodbye. All right, so it's a temporary goodbye right now. All right, so let's go on to slide number one here. There we go. So when most people think about retirement, they worry about things like inflation, right? And we worry about it too. It's a big focus in those early meetings when we run through those retirement cash flow studies. And if we've never done a retirement cash flow study for you, then we haven't completed your financial plan and you need to get in here and we need to do a retirement cash flow study. And a critical component of that is inflation, right? We ask questions like, can I maintain my current standard of living with the assets I have? All right, that's phase one. But later on in retirement, if you live well into your 90s, like my mother, Barbara Joan Bodnar, you no longer are at your current standard of living. Your needs in late retirement change, and therefore your living costs change. And oftentimes they change in a major way, because the odds are you're not living in your condominium in Monroe Township anymore, off exit 8A, like my mom and dad did. You're living in some type of other place, like an assisted living facility or something similar. And that place is writing monthly invoices that you need to pay. And those invoices, let me tell you, come with a very sharp Ticonderoga pencil. Those places charge for everything. So think about your retirement plan, not really as one plan, but it's more like two plans, or it's plan, 1A and 1B. You have phase one, which is the picture on the left. Phase one is planning for you to maintain your standard of living for as long as you physically can. There's the happy wife on the back of the husband. They're probably in Siena and their horse just won at the Palio and they're so happy trying to decide which trattoria to go to for dinner tonight, right? Phase two is making a plan, and that's a picture on the right. Phase two is making a plan for when you can't live that life anymore. How can you fund phase two in a way that's dignified, comfortable? That's what we call long-term care planning. All right, so we're going to dive into that right now. All right. So long-term clients have heard us say over and over, the greatest ally of any long-term planner is time, right? Time. And it turns out Teddy Roosevelt feels the same way, right? Old Teddy said, old age is like everything else. To make a success of it, you gotta start young. So planning for life in your 80s actually starts in your 50s. Around 50 years old, 50 to 55 years old is really the sweet spot to start thinking about this, right? Because for a couple of reasons. One, it's around that age where you get what I like to call a front row seat to watching your parents age. All right. You know, we grew up and our mom and dads were our heroes and they were the strongest people we knew on the planet when we were in our teenagers and our 20s and our 30s and our 40s. And all of a sudden we end up in our 50s and our parents are in their 70s and their 80s and they're starting to get old. And we have a front row seat to that. Right. And maybe they're paying for their own care, or maybe they're actually relying on you for some of that, right? Anyone who has been a caretaker or been in the caretaker role knows what I'm talking about. It's a lot. Daily caretaking puts physical, financial, and big time emotional burdens on the loved ones who are doing the caretaking, right? Sometimes we talk about care for the caregiver, all right? It's a big commitment when you're a caregiver and one that changes family dynamics, which makes this a very, very big decision. All right. Justin,
Yeah.
hop in here.
And here's what makes the decision even harder. Now, most people, they don't believe they will really need daily care. So it sneaks up on them. Almost 70% of people turning 65 will need long-term care someday. 70%, 7 out of 10. But only 8% of people think it will happen to them. So it's going to happen to 7 out of 10, but only 8% of people think it will actually happen to them. And by the time they need it, it's going to be too late to get it. So Americans are in for a rude awakening, but not us. Why? Because we showed up here for our long-term care webinar tonight. So you're all in a good spot. Now, we are following Teddy's advice and we're starting young. We're thinking about this early on so we can plan for the future. And the best candidate for acquiring long-term care insurance is an adult between 50 and 65 years of age who is currently in good health. That's why we targeted our audience today to look into this, because you're at that prime spot where you should be looking for solutions to your long-term care plan. And if you're looking for those solutions and you aren't currently in need of it, you're probably too late, because by the time you need it is by the time it already passed you, where you should have started planning for it prior to that. So what does planning for phase 2 look like? Well, when you come into the office and we start talking about long-term care, it actually sounds a lot like planning for phase 1 of our retirement. We're going to go into our imaginations and we're going to pretend that we're in the future and we're older and we can't live alone anymore. And we're going to think about what we want our daily life to be and the environment around us to be and what that's going to look like. And then we're going to look at some numbers and we're going to figure out what that life might cost and how we can prepare to fund that life someday. Now, before you all start daydreaming on me, let's go over the basics of what actually long-term care is and what it isn't.
All right. So many people assume the cost of ongoing care and nursing home stays are covered by your health insurance. That's myth number 1. All right. Long-term care. Read that first line. Read it out loud. We'll read it together. Here you go. All of you at home. Long-term care, known as LTC, is not, in fact, that should be underlined and in italics. Long-term care is not covered by health insurance, period. All right? They are not. Traditional health care and Medicare cover temporary medical events, such as doctor appointments and surgeries. Long-term care insurance covers the ongoing costs of daily care. Think of it as like adult daycare, right? You go to work, you drop your kids off, and it's daycare, right? You might end up dropping your parents off or something. That's daycare, but adult daycare. So myth number one, long-term care is not covered by health insurance. All right. Long-term care insurance covers the ongoing costs of daily care. Next slide. All right. So to collect on long-term care insurance, a person must be unable to independently perform at least two of the following tasks. We call these ADLs, right?
Activities of daily living.
Right. Bathing, dressing, using the bathroom, continence, eating, being able to move up and down the hallway, moving from one place to another. These 6 tasks are commonly referred to, as Justin pointed out, as activities of daily living, ADLs. The disabilities must be chronic, and they must be expected to last over 90 days. So if you are physically unable to perform an activity, 2 of these activities of daily living, and you own a long-term care policy, then you will go on claim. Or, you see this little or in the lower, there's a second test, or a person might have a cognitive impairment that qualifies them to start collecting their long-term care insurance, right? Organic cognitive impairment includes chronic conditions such as Alzheimer's, dementia, Parkinson's. There's non-organic cognitive impairment. It could be caused by a stroke, traumatic brain injury, and in some cases, even depression or some other behavioral related condition, right? Something that diminishes an individual's ability to care for themselves. So this is not an exhaustive list, right? This just gives you a little taste, all right? Think of it as if you could be a danger to yourself or others without supervision, then there could be a case for long-term care. So these are the 2 triggers, right? Possibly you are unable physically to perform activities of daily living. Your mind and your brain is strong, but your body's breaking down on you. You go on claim. Or the opposite. Your body's strong, but you're starting to show symptoms of a cognitive impairment, right? Either or. You're unable mentally or unable physically, then you go on claim.
Yep. And, long-term care takes on many forms. Most people think long-term care insurance is only for old people in a nursing home. It can be, but long-term care has evolved over the last 25 years. Actually, in fact, most long-term care is happening in the communities these days, either at home or in an adult care facility. You can see the different options on this slide, each one of them offering a greater depth of care than the one before it. So let's look at them as they progress. You have at-home care. This is home health aides and visits from therapists or doctors and nurses, or maybe some meal deliveries and other services that you need. Then you have community care, which is adult daycare, social support, and wellness programs. You also have independent living, right? These are retirement communities. They're often with a step up into an assisted living later on, if you progress to that. And then you have assisted living, which is an in-between for those who can do some activities of daily living, but maybe not all others. They only can do some of it. And then you have your, most, care that you need, which is a nursing home, and that's full-time skilled nursing care. So you can see that there's a progression of long-term care where it starts at home or an adult daycare, but it can graduate all the way up to assisted living or being in a nursing home.
Right. And again, just while we're on the slide, before we move on, we do always think of people like my mother or my mother-in-law, little old ladies in their 90s and their bodies are just starting to break down and they end up in the nursing home. But there's stories of younger people. I always think of Superman, Christopher Reeves. I'm not sure, he was probably in his 40s and he flipped off that horse and he ended up in a nursing home and needed long-term care for a really long time. Michael J. Fox, Parkinson's, right? Maybe in his late 30s, 40 years old. All right. Ronnie Reagan, he was older, but Alzheimer's. And then the Rhinestone Cowboy, Glenn Campbell, right? So it happens, and it doesn't matter how much money or fame you have. Things happen in life, sometimes when you're young and sometimes when you're older. So Justin's right on this slide that long-term care takes many, many forms.
And that goes back to maybe the 7% of people actually thinking that they'll need long-term care.
That's right. That is it. I think this slide really is powerful all the way back here, that the reality is it's going to be 7 out of 10. But when you drill down into that study, only 8% of the people say, yeah, but I'm not going to be one of those 7. 7 out of 10 are going to need it, but really most people believe they're going to be one of the 30%, not part of the 70, and they're dreaming. All right. So who needs long-term care insurance, right? The question is, do I need long-term care insurance, right? These are options for funding that phase 2 of retirement, right? We have, if you've been a long-term client of ours, we have spent probably 75% of our meetings on phase 1 of retirement, and we just kind of give short shrift to the risk management part of financial planning. And we're making a concerted effort over the next 12 to 18 months to drill down a little harder into people's risk management. So the question is, do you need long-term care insurance? Well, unfortunately, the answer is it depends, right? Don't you hate that answer?
Everyone does.
It depends. There's 3 main options when it comes to funding long-term care. Now, notably missing on this list is Medicare. Medicare, that's health insurance. All right. We went through that. It's a myth. Health insurance and Medicare, if you're over age 65 and you're on Medicare, does not pay for long-term care. Christopher Reeves and Michael J. Fox and Ronald Reagan and Glenn Campbell's health insurance, or Medicare, if in the case of Reagan and Glenn Campbell, they were over age 65, all right, did not pay for their care, right? I'm not sure how their care got paid, but it sure as heck was not their health insurance carrier. Same with Christopher Reeves and Michael J. Fox. Health insurance paid probably the first couple of days when they needed skilled care. Medicare does not pay, and your health insurance does not pay for long-term care. It pays for short-term care under 90 days. Okay, so we're going to run through the 3 options: Medicaid, long-term care insurance, or out-of-pocket. This is how long-term care, long-term, over 90 days. These are the ways that long-term care gets paid. Either Medicaid, you have a long-term care insurance policy, or you're paying for it out of pocket, or a combination of long-term care and out of pocket, which is really what we focus on here. So for Medicare, I'll let Justin run through Medicaid.
Yeah. So, a lot of people think that, Medicaid is the solution to all things, but it's tough. You have to have low enough income and asset levels to actually qualify for Medicaid. So you can try to give all your money away, but beware. You get what you pay for with Medicaid. Selection is limited, the quality is inferior, and there are shortages actually in wait lists. Just because you qualify for Medicaid does not mean that you are guaranteed a bed, and shortages are an issue right now. And just imagine how much more of an issue it will be as the baby boomers continue to age.
That's right. Sitting in the middle is Goldilocks, right? That's long-term care insurance, right? That if you have a long-term care policy and you meet one of the tests, your inability to perform 2 of the 6 ADLs, or you have a cognitive impairment, then you go on claim, right? Long-term care. And then those with the highest net worth might be able to afford paying out-of-pocket costs, but we need to be very careful here. Remember, we don't have a crystal ball. You don't have a crystal ball. We don't know when we will need long-term care and for how long, whether you'll need it at all.
Yeah, some
right?
people don't.
Or you might need it for 20 years. We don't know. So you run the risk of bleeding yourself dry and landing up on Medicaid. All right. So Medicaid, let's, this is myth number 2, right, Justin? Myth number 1 is, well, I'm just gonna, just my health insurance is gonna pay for it.
Nope.
No, it's not. Medicare, right? Medicare and health insurance is not gonna pay for long-term care. Medicaid, a lot of folks say, well, I'll just give my money away and I'm gonna go on Medicaid. Well, and that's their plan. That's their plan. And I have to be the one, and now Justin is taking my place in doing it, to inform them that no, it isn't, because odds are you're not going to qualify for Medicaid, right? You can't fund long-term care forever, right? Because you're going to run out of money, most of us. So they start giving money away to get their assets low enough to qualify for Medicaid. We call that the Medicaid spend down. But that strategy doesn't work the way it did when I came into this business in the 1980s, right? Back then, we could talk about this on a Friday, and by Monday afternoon, you could be bankrupt. We could have given all your money away. We roll grandma into the nursing home, and she fills out the form. What do you own? She says, nothing. I gave it all away. They say, okay, you're poor. You qualify for Medicaid. All right. The government's catching on. Well, they caught on, and they created a 1-year look back. Then they changed it to a 3-year look back. It is now a 5-year look back period to see if you've transferred any assets to others. And if you have, the total amount would put you over the Medicaid asset limit. You're disqualified. And the Medicaid asset limit is pretty low. So again, the goal is to avoid settling for a Medicaid nursing home benefit anyway. It's not the best care. So we want a plan to be by design rather than by default. This is a really big stumbling block for a lot of folks that they need to get over, that they really believe, one, that they're in the 8% and it's not going to happen. And then if they do happen to be in the 70%, that they do end up needing it, that somehow the Medicaid fairy godmother is going to show up and wave the wand and the government is going to pay for it. And I'm here to tell you that that's not the case.
And the crazy thing, like we saw on the slide before, even if you did qualify for Medicaid, it doesn't guarantee you a bed. And who knows if and when you will get that bed.
Not all long-term care facilities accept Medicaid.
Yeah.
And a lot of them that do, you may not want to be in there, right? Those are the horror stories. So, all right. How much does long-term care insurance cost, right? Well, again, back to it depends. Great answer, right? The cost of long-term care premiums depends on several factors. There's a lot of moving parts, all right? Things such as age and gender. Wow, I didn't even know in the year 2024 I could even talk about age and gender anymore. So, but long-term care insurance companies can. They look at your age, they look at your gender, they look at your current health status. Do you smoke? Do you not smoke? Are you on meds? You want to put $100,000 into a IRA here at Bodnar Financial. All you have to do is write a check. You want to buy a long-term care policy here at Bodnar Financial? You don't just write a check. I wish it was that easy. You have to fill out an application, and the insurance company has to accept you. They have to accept you as a risk. They're going to examine you. They're going to contact your doctors possibly. They're going to run a credit report on you. They're going to look at your driving record and make sure you don't have a half a dozen DWIs. They don't want you if that's the case, right? So they're going to look at your age, your gender, your current health status, how much coverage you're applying for. Do you want to own it individually? Do you want to buy a policy just on yourself? Or is it joint with a spouse? How much do you want? Do you live in Iowa or do you live in New Jersey? We're going to talk about costs here in a minute. Do you want inflation on it? Very big part of this is inflation, especially if we're talking about a 50 or a 55-year-old buying something that they're not going to use for 20 to 30 years. You think the cost is going to go up? We're going to talk about that. How long do you want to self-insure? We call that the lag time until the payments kick in. I like to call it a time deductible. How long can you make the payments to the nursing home or the assisted living facility yourself? How much of this risk, based upon your financial planning, can you absorb personally before the insurance company starts paying, right? The longer you can self-insure, like a deductible, the lower the premium. And then how long do you want those benefits to pay? Lifetime, right? Very expensive. In fact, a lot of companies won't even write lifetime coverage anymore. All right. So here, Justin, run through some average costs.
And remember, this is just the average cost of long-term care insurance. So, $1,200 for a 60-year-old man gives you $165,000 of coverage. So that's the average, $1,200 for a 60-year-old. Now,
and that's a 60-year-old non-smoker in good health.
Good thing to point out. And now that same coverage for a woman, 60 years old, is $1,960. So you might be asking yourselves, John, I think you know the answer here. Why is it more costly for a woman versus a male?
I know why. Because men go into nursing homes, last about 30 to 90 days and just drop dead. Women last sometimes 10, 15 years.
So therefore, they know that.
The insurance company knows that they're going to be on claim longer on average, not always, but on average, they're going to be on claim longer for a woman than a man. And if you've ever been in an assisted living facility, you know that. Go into the cafeteria, go into the restaurant, go into the dining room, and you'll see about 7 women for every guy. And that's just the way it is. I wish it was like that when I went to college in the 70s, but it wasn't that way.
Yeah. And, as we talked about before, so you can own it individually, but also married couples can buy a more affordable joint policy, but that comes with a combined coverage limit rather than 2 separate limits. And the average, cost for that is $2,550 for a joint, married couple for $165,000 benefit. Now, remember, these are just the averages. Let's take a look at how those price tags change when we switch just a few variables from our examples here on this page.
We'll put that smiley face on there.
That's my artwork I've been working on.
I can see. Very nice. All right, let's say. All right, let's take our 60-year-old man right in the middle of the page here, circled, right? 60-year-old man, there's our 1,200, right? We said the average is 1,200 per year for a 60-year-old man. All right, so there's that $1,200 right in the middle of the page. If we take our 60-year-old man and put him in a time machine and went back 5 years, well, he would save money, right? The average premium, the average annual cost for $165,000 of long-term care insurance is only $900 instead of $1,200, right? Or you could pay virtually the same amount, but get inflation protection. Have that $165,000 benefit increasing over time so that when in all likelihood, unless you're Christopher Reeves or Michael J. Fox and something happens at a younger age, but if you end up being Glenn Campbell or Ronnie Reagan and you're in your 80s or 90s when you finally collect on the policy, you think that the cost of a nursing home has gone up over the course of that 20 and 30 years? You're darn right it has. So for about the same premium, our 55-year-old can not only get the $165,000 of insurance coverage, but that $165,000 is growing every year. But let's say that our 60-year-old is actually asleep and hasn't been taking the advice of his trusted financial advisor, and he waited 5 years to start thinking about it. And oftentimes we see here in the office that something happened in those 5 years. We'll get a phone call and someone will call and say, hey, remember that long-term care we talked about 5 years ago? Can I still get that? And it's because something happened. a friend, a neighbor, their grandparents, their own parents, something happened in their life and they said, you know, I want to make sure that that doesn't happen to me, right? So they kind of reopen the examination of should they do it for themselves. But if you wait, the cost goes up. That's why Justin put this
Yeah, I don't like to do that one, but
the unhappy face. Yes,
it's true.
right? So you wait, the price goes up. I'll tell you the other thing, not only the price goes up, you dramatically increase the likelihood that you won't get it because, you know, you might have went to a doctor's appointment and the doctor put you on a cholesterol medicine or something else happened to your health, right? So not only does the price go up, but it becomes more difficult to qualify medically for this stuff.
And the insurance companies know that. They know that, you know, as you get, every year that you get older, it's more risk of you becoming closer to long-term care.
Yeah, back in the 80s, early 90s, when I really first started to investigate long-term care insurance, I didn't even really think about it. I didn't put it in the financial plan until age 60 or older. We're putting it in as a module in the financial plan now at age 50. Age 50 and above, we start talking about it, all right? Now, we went from a smiley face to 3 exclamation points. Look what happens if a woman waits 5 years. And again, these numbers are just examples, right? These are averages. We will run illustrations for you. If you want to talk about this and drill down a little deeper, we will run personalized illustrations for you. Your personal price tag will depend on a lot of factors that we talked about earlier, all right? But cost isn't decreasing. Waiting costs money. So don't run out of time. And have to pay for all of this out of your IRAs and everything else. Because we're going to look at the actual price tag for this stuff now.
I don't like looking at the price tag, right? But we got to share it with
That's a big increase in 5 years for our average female from 1,960 to 2,700 bucks. All right, that's a major increase. Yeah. All right. So how much does long-term care cost? Here you go, Justin. Take over.
This is what everybody's waiting for, right? I mean, the anxiety that we built up to get here. So, and these are the averages, right? These are the monthly averages out-of-pocket cost in the New York area, right? So, and it's going to go through the different levels of long-term care service, right? So as we progress and we need more long-term care, you'll see in the next couple of slides on how these averages go up. So for homemaker services in the year 2023, assumed 44 hours of work a week, that cost currently is $5,148. And it's projected in 20 years, that same cost is going to be $9,298. Remember, this is monthly, not annually. These are monthly costs. What if you need a homemaker health aid, right? In 2023, those costs currently per month are $6,483. And it's projected in 20 years from now, those same costs could cost around $11,709. So you can certainly see why maybe that inflation piece to the long-term care insurance, if you qualify, might be very beneficial. Adult daycare. Right? In 2023, the monthly average cost is $2,275. That's also looking to increase by nearly 2 times by the year 2043. That will be $4,109. Assisted living in private room, right? So this is as we're getting, and we need more assistance in long-term care. These costs in 2023, and these are the monthly averages again, $6,508.
And I can vouch that this is definitely an average because my mom is in assisted living private room in Spring Lake, New Jersey, down near my brother Glenn, and she's paying more than $6,508. Or we, as a family, are paying more than $6,508 a month.
Yeah, and by 2043, if the average itself is projected to go to 11,754, so even what you're paying, it's
In the metro New York area, that'll be $15,000 a month.
unbelievable. And then you have, even more intensive care. Now you need nursing home and a semi-private room, right? So the level of care just continues to go up. Those monthly out-of-pocket costs currently are at $12,471, and in 20 years projected to be at around $22,524.
Right, and if some of you don't believe that, go to the next slide because it's a private one. Yeah. I mean, you look at that and remember, that's not annually, that's monthly. Take $13,535 and multiply it by 12. And that doesn't include an aspirin. There's a lot of a la carte stuff that's not included on that. And if you don't believe it, find a friend, a neighbor, a coworker who has a mother or a father or a grandparent in a nursing home and just ask them. Say, hey, what's it cost? And they will roll their eyes and spit out their coffee when they tell you the story. There is no doubt. If anyone who's been through this knows that that's true.
Yeah. So now
that's why we're on this seminar, this webinar.
So it doesn't actually sound too bad when we were saying earlier, the average cost for a male, being $1,200 for the annual premium doesn't sound too bad. Will it cover 100% of your cost? Well, it depends on what type of long-term care coverage you need, but it'll certainly help, right? Any portion, you don't have to fully insure all of long-term care.
Right.
But you should try to insure at least a portion of it, or consider to. Now, some people still can't wrap their heads around paying for insurance that they might never need, right? I mean, everybody hates paying for something that they never use. And the industry actually has come up with an answer for those people. Some life insurance policies actually offer long-term care riders, which lets you tap into your policy's death benefit to pay for long-term care while you're still alive. If you collect on your beneficiaries, if you collect on your long-term care rider, your beneficiaries will get a lower death benefit, but it sure does beat blowing through your nest egg on your balance sheet. And if you have even better, you might have an old insurance life policy that has built up a substantial amount of cash value in it, right? You actually might be able to take that cash value and do a 1035 exchange into a new life insurance policy with a long-term care rider on it. This is called a hybrid plan. And these things might be brilliant and a perfect solution for many, because your balance sheet might have grown substantially over the last 30 or 40 years, especially if you're working with John Bodnar and all the advice he's been giving you, that you might not need that life insurance policy as much. But do you know what you do need? You need some long-term care help. So this might be a way to look at those old life insurance policies and actually get best dollar use out of them, because it might not just be that you need the death benefit for when you die. You actually might need to tap into that.
That's a really exciting new concept that wasn't around 25, 30 years ago. This whole idea of bundling the long-term care and the life insurance together, right? We're not sure, this has been a stumbling block for me personally, right? That I'm not sure that I'm going to end up in a nursing home someday or an assisted living facility. I might just go to bed one night, and as my grandmother did, it was death by chocolate, and she just died in a diabetic coma, and they say it's a wonderful way to go, and she never needed long-term care, right? And if that happens, you say, geez, I paid all those long-term care premiums. So we don't know if clients are ever going to need long-term care. But it's a big risk not to think about it. But we do know one thing for sure, as that great American poet Jim Morrison said, no one gets out of this alive. You're gonna die. We're all gonna die, right? So maybe this whole idea of bundling long-term care with life insurance, it's a pretty smart hybrid use of life insurance. I love it. And I think we just did 2 or 3 of them, and we're going to do a lot more.
Oh, I think
like
it's going to be the new way people look
Yeah.
at trying to pay for long-term care.
Yeah, I think it's pretty exciting. So we can run those illustrations for you too, right? So what's the bottom line? All right. The bottom line of this whole thing is making a plan for long-term care is mission critical, right? We're here to help because without it, you've only planned half of your retirement, right? That phase 1. So we're here to help. If you're age 50 or over and you don't have a plan for phase 2 of your retirement, please give us a call or make sure we talk about it at the next annual review. I mean, it's on our hit list to talk to our clients who are over age 50 in the annual reviews. We're going to do that. All right. So, thank you for being here tonight. We said it would be about, 40 to 45 minutes, and we're pushing up about 40 minutes right now. So thanks for being here. We hope you found this helpful. Enjoy the rest of your evening. And if we haven't met in a while, call the office. We're due for an annual review. Here's our contact info. And I think there's even a slide
With all
from the attorneys and the compliance folks, right? There it is. So,
while this plays real quick, we want to sign off to everybody and say hello.
oh, there we go.
I was able to figure it out.
He figured it out.
So it's nice seeing you. If you have any questions from our presentation, please make sure you reach out to us either by phone or email. We'll address those questions with you individually. And we certainly look forward to our next webinar of some sort.
And if you're watching, Mom, this was for you. And you can see it every night on my YouTube channel, Mom. You can watch it again and again and again. See you later.
Good night, everyone.
Good night.